The price action is a battlefield, but a critical target is now in sight. Today, January 20th, 2026, Shiba Inu is locked in a volatile struggle, yet analysts are pointing to a key resistance level that could unlock the next major move. We are diving deep into the technical data to uncover why the 850 unit mark is so important. Is this the moment the market breaks free from consolidation? On-chain data suggests the foundation for a rally is being laid. Stay tuned as we dissect the price forecast that has the entire Shiba Inu community on edge. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. According to reports, Shiba Inu is currently trading at approximately 800 units, maintaining a market capitalization in the range of $4.7 billion and a 24-hour trading volume of over $110 million. The context for today's analysis is the critical resistance level at 850 units. This level is not merely a number. It represents a confluence of technical and psychological barriers. Technically, it marks the upper boundary of the current consolidation range, and a decisive break above it would invalidate the recent bearish structure, potentially triggering a cascade of buy orders. Psychologically, it is the first major milestone that traders are watching to confirm a shift in market sentiment from cautious accumulation to a renewed bullish outlook. Analysts note that while the asset has faced significant annual price declines leading into 2026, the current price, stability around the 800 unit mark, is providing a base for a potential short-term move. The entire market is now focused on whether Shiba Inu can muster the momentum to test and ultimately breach this key 850 unit resistance. The main event on January 20th, 2026 is the intense consolidation and volatile price swings around the 800 unit level. The token has been locked in a tight trading range for the past week, with intraday volatility remaining high, suggesting a fierce battle between buyers and sellers. As per technical analysis reports, Shiba Inu recently tested a key support level, which corresponds to the 0.618 Fibonacci retracement level, after a sharp drop. The successful defense of this support is the primary catalyst for the current short-term bullish outlook, targeting the 850 unit resistance. This price action confirms that while the overall market structure remains volatile, there is a strong underlying demand at the current price floor. Analysts note that this pattern of volatile consolidation, followed by a successful defense of support, is a classic setup for a breakout attempt. The immediate event is the market's preparation for this potential breakout, with the 850 unit level acting as the gravitational center for all short-term trading strategies. The market's reaction to the current price action is characterized by cautious optimism and aggressive range trading. Experienced traders are actively scalping the tight range between the recent support and the 850 unit resistance, capitalizing on the high intraday volatility. According to trading platform data, there has been a measurable increase in limit orders placed just below the 850 unit mark, indicating that a large segment of the market is anticipating a test of this resistance and is positioned to sell into it. This reaction highlights the market's maturity. Instead of a panic sell-off, the volatility is being met with calculated trading strategies. The prevailing sentiment is that a move to 850 units is a high probability event in the short term, but a sustained break above it is far from guaranteed. This cautious reaction is further evidenced by the fact that while the price is holding support, the overall trading volume, at $110 million, remains moderate, suggesting that large institutional capital is still waiting on the sidelines for a definitive breakout confirmation. On-chain evidence provides a compelling argument for the potential price push toward 850 units. As per on-chain data, a significant amount of Shiba Inu tokens, approximately 370 billion, have been removed from centralized exchanges since the beginning of January 2026. This massive withdrawal, worth millions of dollars, is a key indicator of reduced exchange supply, which can lead to increased price volatility and a faster upward movement when buying pressure resumes. Analysts note that this reduction in liquid supply is a fundamental factor that could fuel the short-term rally to the 850-unit target. Furthermore, data from blockchain analytics platforms shows that whale wallets have been active, with a few large transactions moving hundreds of billions of tokens into self-custody. This whale accumulation, combined with the tightening exchange supply, suggests that large holders are positioning themselves for a potential price surge, lending credence to the technical forecast targeting the 850-unit resistance. Technical analysis strongly supports the short-term target of 850 units. According to reports from financial news outlets, the MACD, Moving Average Convergence Divergence Indicator, is showing a bullish momentum shift, with the MACD line crossing above the signal line. This is a classic technical buy signal that often precedes a move to the next major resistance level. Furthermore, some analysts have identified a potential bullish reversal wedge pattern on the weekly chart, suggesting that the long-term downtrend may be nearing its end. However, a counter-analysis from other market observers notes that the overall structure remains bearish, with the price still trading below key long-term moving averages. The consensus analysis is that the 850-unit target is achievable based on the short-term technical indicators and the tightening on-chain supply. The critical factor remains the volume at the point of contact. A high-volume breakout above 850 units is required to confirm a true trend reversal, while a low-volume rejection would simply reinforce the current consolidation range. The Shiba Inu community, often referred to as the Shib Army, is fixated on the 850-unit target, viewing it as a crucial psychological victory. On social media platforms, the conversation is dominated by chart analysis and community-driven price predictions, with many posting technical charts highlighting the 850-unit level. This collective focus is a powerful, albeit speculative, force in the market. The community is actively promoting the narrative of a supply shock, driven by the massive token withdrawals from exchanges, as the primary catalyst for the price move. However, analysts note that the community's enthusiasm is tempered by the extended silence from lead developer Kusama, who has not provided a major update in weeks. While the community remains resilient, the lack of a clear, recent development from the core team means that the current price action is being driven almost entirely by technical factors and on-chain metrics, rather than a fundamental narrative push. The short-term forecast, 1 month for Shiba Inu, is a high-probability test of the 800 SEU's 50-unit resistance. Based on the bullish MACD crossover and the reduced exchange supply, analysts predict the token will reach this level within the next 4 weeks. However, the forecast for a decisive break above 850 units is less certain, with many predicting a temporary rejection before a second attempt. The long-term forecast, 3 years, is highly polarized, reflecting the speculative nature of the asset. The average long-term forecast hovers around 4,467 units, which would represent a significant gain from the current price. The key takeaway from the long-term forecast is that any substantial sustained price appreciation beyond the 850-unit short-term target will be entirely dependent on the successful implementation and adoption of utility projects like Shibarium and any forthcoming artificial intelligence initiatives. The primary risk to the 850-unit forecast is the lack of sustained buying volume at the point of resistance. Analysts caution that a low-volume push to 850 units will likely result in a sharp rejection, reinforcing the current consolidation range. A secondary risk is the overall bearish market structure that has persisted since late 2025. While short-term indicators are flashing bullish, the long-term trend remains downward, meaning any rally is technically a correction until a higher high is established. Neutral insights suggest that investors should use the 850-unit level as a take-profit target rather than a breakout entry point, given the historical volatility and the current market structure. The highest risk is the failure to recognize that the 850-unit target is a technical milestone, not a fundamental trend reversal, and that the price could quickly revert if the broader market sentiment turns negative. The Shiba Inu price action is a high-stakes game of technical woe. Precision, with the 850-unit resistance level now the most watched number in the crypto world. The confluence of bullish technical signals and tightening on-chain supply suggests a test is imminent. But remember, a test is not a breakout. The market is giving us a clear target, but the ultimate direction will be decided by the volume that arrives at that critical level. Keep your charts open, because the next few weeks will determine the short-term fate of Shiba Inu. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.